Just stop it. The run-of-the-mill, cheesy, humdrum bullshit status quo just tires me out. What fascinates me are the industry disruptors, the superhuman frontiersmen or women who go through hell to achieve their goals. Join me as we meet and learn from those mavericks, rebels, and business leaders that aren't afraid to piss off the establishment in order to make radical change for good. Sponsored by Johto PR, the disruptive anti-PR firm that murders your competition with cinder blocks and cyanide. This is Disruption Interruption. Okay. Welcome back, everybody, to Disruption Interruption. I'm your host, KJ, and we're here today to talk to another industry leader that has steered off the lame, tired path of the status quo. All right, let's get into a problem hiding inside some of the biggest business transactions and settlements. When a deal is small, moving money can feel simple. But when you're talking about commercial real estate, private equity, M&A, asset acquisitions, or other high-value transactions, payment becomes a lot more complicated. Funds get locked in escrow, proof of funds have to be verified, compliance checks slow everything down, wires move manually, and suddenly millions of dollars can be sitting idle or lost while everyone waits for the system to catch up. That's where things break. So what happens when a fintech founder decides high-value settlements should work like modern infrastructure? Our guest today is building the missing payment layer for complex B2B transactions to help organizations move sums faster, safer, and with less friction. He's the CEO and co-founder of Nezz, Lopsii Olagoke.
Hi, KJ. How you doing?
I'm great. I'm great now that you're here. How are you?
Well, I'm well. Thank you. I'm really good. I'm good.
Great.
Wonderful intro.
Thank you. Yes, well, you're wonderful. So that's why you get a great intro. Everyone loves our intros. We'll send it to you.
Okay. Thanks.
Okay, so before we get into things, Lopsii, our listeners always like to find out, when we have innovators on this particular podcast, innovators have something that drives them,
Right.
something that's probably driven them most of their lives, or something that they've learned about themselves that guides how they look at things, how they process things. For you, what's been a fundamental, foundational ingredient for you for innovation or disruptive innovation?
Well, I think the best way I do it is I look at a problem. Well, I guess it wouldn't be considered a problem at the time. It's something that works, but people just accept it because it works. And coming from a traditional household where it's like you're told what to do and you just have to follow. And some part of my life I decided to become a rebel. And I'm like, why is that? Why does it have to be that way? And it's not to rebel it's more to understand. Okay, you got to explain to me why this moves this way. Why do we have to wait for this process? Why does a wire take 3 days? Why does it take 5 days? Why is this standard made this standard? Why are we not moving up something else? So that's how I start to see things, and it's shaped how I've come to found this company.
Curiosity. Why? Yes. And a rebel. Okay, so you match 99% of all the people that have been on this podcast, of all the
Yay.
hundreds. Yes. Yes. Why does it have to be this way? And you kind of do get labeled as a rebel, but it's definitely for a good cause, right?
Right.
All right. So for our listeners, why don't you explain the status quo, the good, the bad, the ugly of this particular system now in regarding transactions, large transactions, settlements, escrow, this and that. Explain what's not working anymore.
Right. Well, actually, let's start off with the way people get robbed.
Great. Let's start off with that.
And I'm going to come down to the individual level. Although what we're building is more for organizations in the higher level, they don't like to be robbed. Actually, they're the ones doing the most of the robbing. But let's come down to the individual level. When you make a purchase for a high value item, in this case, let's say a home. KJ, I'm sure you bought multiple homes, and I'm hoping you buy more in the future. Or maybe
I hope I buy.
you take away 10%, usually 10%, sometimes 15%, 20%, whatever your escrow agent or whatever is decided. You take that money away from your bank account, you transfer it out, usually via wire,
Yep.
ACH, and you take it into a third party's account. This third party can represent an escrow agent. This third party can represent an attorney, a law firm, depending on what state you are. Now, once that money sits there, it's actually earning yield for the organization or the person, the third
That
party.
it's sitting there with. Yeah.
Sitting there. Now, people wouldn't consider this rob because you're not seeing the money anyway, right? Because you're not seeing the money, you're focused on the whole process. But I'm thinking back to that rebel status. If you're putting your own money somewhere else, why don't you make some money from it too? Especially now in today's day where we have a high inflationary market environment, 4.7% on a bond market. and 3.6 on the federal rate. If you were to earn that, whatever percentage you put down with the escrow title agent, if you were to earn that, that's extra money in your pocket. That would have covered your escrow fees, very likely. That would have probably covered, having a snack with your kids or your partner for the evening to celebrate the new house you're buying.
Yeah.
So that's how I put it. And I think things that should change because an industry that operates that way, again, I must mention some states enable for the escrow yield to be given back to the individual, and some states do not.
How many states actually allow that? And when did that come about? I mean, it obviously came about because enough people were seeing that this is not viable,
Right,
right?
right. So I can give you an example. For example, states like New York and New Jersey have a pool of funds where the money goes not back to you in terms of the yield, but to a dedicated fund for, I believe, how do I put it? I want to make sure I say it right. Judicial system. So people who don't have attorneys to fund those kind of things. So it's which is a social cause. Very good. I think
Hmm.
that's great. But in some states, particularly California, Florida, Texas, they're mandated now, meaning they're mandated does not mean they do it. And again, I'm not here to call any names because that's not what I'm here for. But I hope that helps you put some more perspective to it.
Yeah. It seems like, the whole thing of penalizing production and rewarding non-production. I mean, the guys that are actually making these transactions go are
Right,
getting penalized, right?
right,
That actually, I think more deals would be done if they
right.
were rewarded.
And I'll give you a good example, KJ. It goes past that. I've explained the problem in a personal environment. Now let's go back to the organizational level.
Please.
There's AI, and I'm thankful for AI. Some people hear AI and they go like, "Oh no, my job." I hear AI and I think of advancement. I think of how my kids are going to be living off in the future. I think of sci-fi, the movies that I could probably watch. I'm thinking of how that's going to turn out in the next couple of years. But AI has had very negative impact. Of course, water usage, electricity, power grid. You think about it. But most people don't know how this AI impact can affect their finances. And I'll give you an example. Recently, what's happening right now, according to the FBI, is there's a 900% increase, 900, in deep fakes and business email compromise. And guess who they're targeting? The law firms that you're putting your money into. Number one, the escrow agents that you're transferring your money to. Number two, the title companies. Those are the people we are targeting. Guess why? They're the ones who are holding the money. So
Hmm.
what they're doing, the process of what the smart hackers are doing, coming from all over the world, is they monitor the process. They look out for deals. They know who the CFO is. They know who's in charge. They know the transaction coordinators. And they make a couple calls, act like the recipient, spoof emails, spoof calls where they're looking like the individual and say, hey, can you transfer the money? The deal has been done. We never saw it, X, Y, and Z. And what has actually transpired in that process is firms, big ones, are actually losing their customers' funds.
Wow.
Now,
How prevalent is that?
it's a good question. If the FBI is saying 900%, meaning of course, they're
It's
informing
much
the
larger if
FBI,
they're saying 900%.
they're informing the FBI, but they're not necessarily making it public. But and again, it makes sense. If I were to come out and say my business lost your money once, lost your money twice, lost your money three times, I think it's wise for me to not do business with you anymore. Right? What would you say, KJ?
Agree.
So
Statistically, I would agree.
so I think that's what they're doing, of course, preserving their image. Now, this is where we come in as a fix for them. I've come about the escrow yield, and it's organizations choose to sometimes give or not give the escrow yield depending on what state it is. But how we come in for organizations who are responsible for being middlemen, title agents, law firms, is that actually can control the whole process without touching the money. So in this case, a business email compromise does not actually affect you. In this case, an attack for wire spoofing does not actually affect you. And I'll tell you how that happens. In this whole process where they can coordinate between multiple parties, because what happens is with a deal, a large deal, commercial real estate, construction, data centers, we're talking about multiple people. We had a conversation with Oracle and Schneider Electric. We're exploring opportunities with them. And they're mentioning when they're having a deal, there is multiple people on the table. The likes of OpenAI, Oracle. There are multiple people representing on the table. So it's a multi-party system. And so in this case, back to my original point, is when an organization, especially this middlemen, are trying to administer, they can do the whole process and not hold the funds, but also still control and maintain the visibility for all parties. And so that's what we're providing. For them, it's not only safeguard for the funds because they're not actually touching the funds. It's always actually sitting in the payer's account, and the payer's payer's Nezz account, which is locked for the beneficiary for the purpose of the deal, but they maintain complete autonomy. And in that process, it actually helps them a bit more too. And I'll tell you how.
It helps who a bit more?
The third party. I'll tell you why. The
Okay.
third party is usually employing minimum three transaction coordinators to facilitate those deals. And that's $60,000 a pop. I think they should have a job. People should have jobs, but every organization is looking for ways to cut costs. And so
Right.
if $60,000 for a manual process, which can already be automated, I think it even makes those people's jobs much, much easier. But that's number one in terms of benefit. But in terms of other benefits, is they actually have most of them have to file extra paperwork for the yield distribution.
But we love extra paperwork. So bureaucratic, isn't it?
Right. And so in this case, we're removing that friction for them. So we're basically, for both parties, we're making life much easier. For those who are law abiding and already following that whole process, we make the whole process seamless. But also the last most important thing is the quickness and speed of money. Because we're a closed loop ecosystem, it's like you're moving money from your checkings to your savings, right? KJ, when you move money from your checkings to your savings, how long does that take?
Instantaneous.
Right.
Yes.
Same process. But because the nature of ours is a closed loop ecosystem, by within all parties, once the whole process is done, you're not waiting for Monday because you did a deal Friday night. You're not waiting for Monday to clear. You're not waiting extra 5 days. The money's actually immediately transferred, immediately. And that's where the beauty comes from. And that's just how that's really the whole scope, and I'll give a summary. The whole transparency process for multi-party, that's number one. Yield
Yeah.
distribution and cutting of costs, that's number two. And the whole simplification and customer experience. A customer's experience is why they're going to come back and choose you, isn't from an organization standpoint, to do business with you next time. If you don't lose the
Right.
money, right? Yeah, and they don't continue to lose money. That's the whole perspective. So I've been able to kind of touch on the personal perspective because I know most people have bought homes, they've experienced having to take money away from their account and transfer into another third party, but don't really know what they're losing. And organizations, particularly the third parties, are starting to see increasing fraud affecting their balance sheets. Because if you're losing money, someone has to pay for it.
It's incredible that you're bringing that up. And that is, something that's not well known. Not only are they losing that money. So, okay, let's do the trickle down effect. What happens when they lose that money? Let's get into that.
Right. Well, the short answer is they got to find the money back.
Yeah, right.
It's the customer's funds, and they've got to, first off, they're going to try to get that money reverted in one way or the other because most process involves a wire, right? Once you send out a wire, it's irrevocable. You can only go in and report to the FBI. That's why the FBI is able to provide such information in terms of the 900% increase. And they say it's going to increase further into the future. So it's not, right now, if you're taking precaution, you're not only doing it because, the FBI say 900%, it's saying you might be next. And it's very, very likely on a 900% scale. But just to answer your question, to look at it, once that money gets lost, somebody has to pay for it. And once somebody's paying for it, whoever they're getting the money from increases their bill,
Insurance.
right?
Absolutely.
It's
Yes,
like,
of
oh, you
course.
lost this money. So it's just like you have a car and you hit someone and you have to pay the insurance, you have to pay for the dent, and the insurance company calls you the next day and says, okay, we're increasing your premiums,
Yeah.
right? So
Yes, of
that's
course. Why did I
exactly
have
what
this
happened.
insurance? Yes. What happens so if the money stays with the original entity, right?
Yeah.
And so what happens? Like you're the other parties now that were probably like planning on this money
Mhm.
that they would be getting and increasing, right?
Right.
That these states are now mandating that they either put into social programs and so forth. What's happening there?
Interesting. Could you repeat that again just to make sure I'm clear?
So in the way it is now, right? It gets
Right.
transferred over. It's either an escrow or whatever, right? That money is earning interest. That money is earning money, but it's no longer with the original entity, right?
Right. Right.
That additional money, you said in some states, they're mandating it goes to social reform or things like that. If it doesn't move over there, right, and it's staying with the original entity, then is there resistance or friction from these other parties that now
Right.
they no longer have that money, right?
Right.
And
Yeah.
and and my question also, I'm going to do two things. What
Okay.
would behoove them to move faster if they're increasing those funds by a certain amount of time, right?
Right. So I'll put it this way, KJ. It's a good question you ask. When we started off, we were like, our goal was to make payments faster.
Yeah.
And make payments faster. And that's why blockchain, crypto is out there. We want to make payments faster. And we realized that was a futile agenda just because things just generally don't move fast. And it's
No,
actually a good
not
thing.
in finance and not in legal. It was a bit maybe
Correct.
naive. We
Things
want it
don't
to
move
move
fast, and
fast.
people
Yeah.
don't necessarily want them to move fast. Again, there are
Yes.
checks and balances done for a reason to slow things down. And so
Yeah.
we thought to capitalize on that. Things don't move fast, but when things don't move fast, it shouldn't cost you, right? So I'll give you the dynamics of what really happens in the background. For a purpose of an escrow transaction, let's use an organization in this case, an organization with an M&A deal, with an acquisition, or the commercial real estate deal. What happens is they put money in to their Nezz account, and they initiated transactions to the other party. So in this case, they're not facilitating using an escrow agent; they're doing it themselves. And what that means in that process is they're inviting the other organization who's going to be a receiver for this funds to partake in this whole process. Now, the beauty of it is with that whole process, the payer who's initiating this deal is inviting their legal counsel, likely an insurance, their insurer, their third party, and even their CFO to overview the deal. But that also gives the other party the same visibility, meaning they have a settlement timeline when that happens. Now, what happens in that case is once that deal has been initiated and both parties have agreed based on the programmatic terms that the payer set, which we've made possible, that fund is actually taken away from their operating account from Nezz into a locked escrow account within Nezz in their name.
Okay.
And what that means is that fund is locked programmatically, cannot be taken away until both parties have agreed based on the third parties and privileges that they provided for that deal to either move forward or to stall. Now, the beauty of that is because of the nature of transactions, not everything is equal, not everything is 0 to 1. There's an infinite number between 0 to 1, right? In that process, they should not be on the hook for a bad process or the other person on the side having to figure out, okay, we've not seen this, we've not heard that, we're still working through things. And therefore, in that whole process of that deal, they're still able to make the yield. So if the deal was meant to last 30 days, look at it this way, KJ. If the deal was meant to last 30 days, the money's locked and then ends up lasting 3 months. The 3 month equivalent that would have been lost if they use a third party escrow agency, would have, that money's gone. But in that process, their yield, which is the big factor there, the yield can actually now return to them once that deal is completed. So the money which was estimated to go over to the other, in this case, payee, would have been transferred, but they still get to keep the money. So that's the whole process. The sake
Hmm.
of the whole thing here is one thing is both parties can invite their legal representative to overview the deal. It's as visual as a transparent settlement timeline. So they're not calling saying, hey, where is the flow? What is going on? All of that is updated in real time, provided by both parties. That's number one. Number two, the delay in the deal does not hurt you anymore. So as long as the deal is going, you're still earning interest because the money is not away from a third party. And if they had chosen to invite an escrow agent into the whole process, the escrow agent cannot be the sole determinant of both parties. And rather than having multiple legal cases, but in that process, they still control. The organization who's initiating still controls because in the end, they were making money by sending money. It's
Yeah.
it's almost that way. So I hope it's making sense, KJ, the use case that we're seeing. And
It
don't even
totally
get me
does.
started with milestone payments. We've spoken on escrow payments. Don't get me
Yeah.
milestone payments.
Let me ask you this about the traditional escrow providers or legacy payment systems. Do you expect resistance?
We do. I'd be
I
lying
mean,
if I
look,
said I don't.
any sort of pent-up demand or disruption or innovation that's
Right.
making things more transparent, more economical, faster is going to create resistance. What
Right.
what do you expect?
Well, I wouldn't say I was naive, but I thought, well, we're here to make sure that we can reduce the possibility of you losing your customer funds and dropping your operating costs. And the next thing I thought of, well, but we're actually cutting into their potential revenues. Now, in some states like Texas, it's capped. The escrow fee is capped. Now, in aviation, they can charge between 5 to 10%, 20%, however amount they choose to. And they both all parties compete in terms of other providers compete to make sure they can get the deal. But in for real estate, particularly residential real estate, it's capped. So because it's capped, they're gonna make some money somewhere else,
Yeah.
right? And so we realized that we might be actually cutting into their revenue by wanting to offer, yield. But this is where we come by, and this is the idea what we bring to them. Now we're actually changing in a bit the operating standard because, as I've heard, is they choose to have it opaque for a reason. We thought settlement timeline, oh, you could be able to do this, without having to contact multiple parties, but they thrive in the nature of it being opaque. So yes, there is going to be resistance, but what we've seen as a move forward is, we want to provide it to the organizations who are doing big deals that usually don't employ escrow agents because they want to be in control. Most organizations want to be in control. Oracle, the likes, enterprise level organization, medium level organizations want to be in control of the process, and they want to cut their operating costs as best as possible if they can do so, and also make money, right? There are companies right now that are built around pay your credit card and make money doing so. There are companies right now saying pay your rent, not credit card. Pay your rent, make money doing so. Pay your phone bill, make money. Like there's a lot of that, and we are taking that a notch higher. So yes, there's going to be resistance for anything called disruption. That's when I really realized that we're here to disrupt businesses. Is we're going to be disrupting the whole process, and there are some laws that protect them for them to exist, right? But the laws don't say that they need to be making the yield. And that's where we're like, okay, well, we're going to play according to the law and we're here to provide the service. And don't get me wrong, KJ, as much as this is very disruptive, we find the benefit is more for them because they're not actually changing any of their workflows. They actually can do it in a programmatic nature. So if they choose to hold on to the yield, all we're doing is we're providing the infrastructure because it's programmatic and they can operate it based into their workflow. Actually doesn't change the whole process. It doesn't change the process at all. You only augment the process to make everything more seamless. So if they're in a state that requires them to distribute yield, they can use the system to do so. If there's a date that says you should not, it's not mandated, they can continue to do so, right? But having to explain from a personal perspective, it's like you're always losing money and you shouldn't.
Yeah. Yeah. No, it's actually really good. And, there's always resistance to change.
Right,
There's always resistance when things have not been transparent. And we find a lot in disruption. One of the things that's being disrupted is the lack of transparency.
right,
Yeah. So when you mentioned the type of companies in middle market, it seems to be the early adopters of this,
right.
right? Can you tell us more about that? I mean, you mentioned it a little bit. Of course, they like to be in control of the money and they don't like to use the escrow agents, and that's where you're starting first. I take it
Right.
that's the faster entry point, faster, speed to market. But tell us more about these early adopters.
Right. Our early adopters have actually really shocked us because we're thinking we're going to target the commercial real estate space because there's high volume and
Yep.
there's a lot of transactions, which saying means high volume, and it's easier to go in less sales cycle. But the interest and the commitment and the adoption has come from medium to enterprise level.
Amazing.
And we're wondering, are we looking in the right or wrong direction? Just because, when you're talking medium to enterprise, particularly also small, there's still a sales cycle. We got to adopt, APIs, transfer it, then the time for it to, usage usually would take months, to take off. But with a platform perspective, where they're using it in a platform like, the way you go into your bank app or the way you go into, Amazon or whatever things you use on a daily basis. In terms of a go-to-market strategy, we've actually seen that there's more adoption. And an example is a robotics company. That there blew my mind. They sell
Wow.
robotic feeders to farmers. Their average deal is $300,000. And we thought, wow, we were not thinking in this direction. How did you find this? Right?
How did they find you?
Well, that's a good question. So one of our investors who also uses the product went out and met this person at an event and they got chatting and he says, you guys are using X big name. They're too big now to mention. I don't want to give them any publicity. They're
Okay,
already
good.
big. And he mentions they use this and their process is 2% plus. And I'm like, you guys are charging that for a $300,000 deal. That's what one of my investors said to them. He was like, yeah, that's what we're doing. And I was like, you guys got to do it a better way. Anyways, that's how we got on the conversation with them and we closed them. And we were thinking, oh, the price might shock them. But then when they looked into, for the service they're offering, when they looked into how much they're already losing, it was a no-brainer. And so we keep talking to more and more customers, and we're starting to see more adjacent markets, and it's blowing us our minds of how far the technology can reach. Because again, we've started with escrow, but the same technology and system that powers escrow powers milestone payments. Milestone
Yeah,
payments saying, you do this first, I'll give you 100,000. Do you
it's
do
so
it?
true.
I'll give you another 100,000. And I say this, one of the earliest organizations to onboard with this was a marketing agency.
Wow, fantastic. So, in essence, so you're opening up a whole middle market. There's a pent-up demand. You knew there was a pent-up demand, but you weren't thinking in that direction,
I was never
right?
thinking like that.
Now you're shocked, which is amazing to me. I love this. So you have this whole middle market segment that's opened up, and from talking to many disruptors and many clients that we have and so forth, this is the biggest benefit right now with technology is the middle market
Right.
because they haven't had access to resources like this. So in one aspect, I find this fascinating. In another aspect, Loopsy, I find it, oh my God, that makes so much sense because of every other thing that I know that's happening. But in essence, you're telling me that capital is going to be able to move faster for them. That means more deals will actually close for mid-market, right? I mean, more deals, that means more jobs, that means more growth, that means lower transaction costs. I mean, more liquidity into the economy. I'm sure you've thought about this, right? Right?
I did, but it didn't come to me all at once
Okay,
because
got
my
it.
focus was way, we want to figure this out for this market. We want to get into that market. And I think the biggest eye opener was when we had a conversation with Oracle, with their leadership with Oracle. And then we spoke to Schneider Electric. Actually, Oracle gave us more information with Schneider Electric than Schneider Electric gave us information. It's just, because they work together. And it's not, this is publicly available information. This is not insider information, publicly available information that we did not know about, right? Because that's not something we're looking into. Anyways, those changed. Our perspective started to change a ton because we're like, well, there's a huge market, and then the demand is coming from one side, and then we're exploring another side, but there's a whole industry that is untapped. And so what now that we're starting to see the potential in multiple industries with what we're starting to do is explore what is the lowest way to market. Now, our first initial is okay, let's hit $20 million ARR first. And then after $20 million ARR, then let's think about, okay, exploring some more markets, right? Let's look into other markets. The idea here is we don't want to boil the ocean. I think that's how disruptors die. It's like, oh, you can really affect everybody. But like, well, okay, yeah, yeah, you can. But why don't we start off with places that have low sales cycle, easier to get in, more adoption, more case studies, and that increased reputation that enables bigger players to want to play in. Because usually most companies target enterprise players. Actually, that's what I always wanted to do. Straight to enterprise. And then we realized that we could serve 10 enterprise companies and we'd probably be stuck. Or maybe 100 because they want this way, you got to change it that way. They'll pay you $1 million. They pay you more than what we're offering. They'll pay you as much, right? But like then you have to support them, and then your whole company is all around them. So it's like, okay, enterprise probably be the last thing we ever do, but everything else
Yeah.
is a huge market.
I the shift is really, I mean, increasing the velocity of capital throughout the middle market. I think it's a very large story, but it isn't a story about payments. It seems to be about unlocking trapped capital.
It's really what it is. Our advisor and also an investor of ours from Harvard Innovation Lab, he says, Loopsy, you guys have uncovered a black hole in.
Another guest said, Loopsy, it's interesting that disruption is blind.
Mm.
Disruption is a black hole. People don't see that. They've
Right,
seen this. You've uncovered something like every day, billions of dollars sit idle. Not
right,
because buyers lack funds or sellers lack assets, but because outdated settlement infrastructure slows commerce.
right.
And you're guys reducing that friction.
Right. The problem is someone is paying for the inadequacy. Someone is paying. If no one was paying for that,
Someone is paying for
right.
inadequacy, and that has been the blindness,
And
right?
that's the right. And that's the problem. If no one was paying for it, if it was just happens to be slow, well, then that's fine. We could always exist that. But someone is paying for it, and we want to change that.
Well, that's a much bigger narrative than fintech.
Right.
It's about making the economy itself move faster.
Right.
It's
One thing I
really
wanted to add in here
badass.
is one thing we've also encountered is you guys are doing such amazing things, okay? But how do we trust you? You know, and then the factor of trust, especially with the bigger players. So wanted to put on the podcast that our banking partner is Wells Fargo by a priority. So meaning every organization, individual who creates an account with us gets FDIC insurance in their name in their account. It's not a wallet; it's an actual account. The account is spendable directly. The account operates like a full-fledged bank account. We're pretty much a bank, but not a bank. Because we're a fintech. We operate like the same way Brex operates, same way Mercury operates, right? With banking partnership. So that's the beauty about it. But in our backgrounds, myself and my co-founder, for me, this is not my first stint in terms of what I've done and accomplished. My co-founder, even more impressive, but he's worked more in corporate than I have. My first stellar accomplishment was building a compliance and billing software in the home daycare management space, and we hit $90 million in billing and payouts within about 9 to 12 months, I believe 11 months of operating. And that actually stemmed the idea of where Nezz was going initially. But anyway, that's another story for another day. But my co-founder has built banks from zero to one. And when people say, what does that mean to build bank from zero to one? Well, the bank, licensed by the government, had no tech stack, very little. And he came in, with a bunch of others, and they built it from zero to functional. So that's what it means from zero to one. So, that's a little bit about our backgrounds, but the core reason of what we built Nezz, the realization we got today was not just the realization we had. It actually slowly morphed over time. It actually started with a
And
problem.
it's still morphing.
It is because
It's
we
still
keep
morphing.
talking to people and they're like, "Oh, you've not explored that market." I'm like, "Yeah."
We have so much to do. Well, I appreciate you talking about your credibility factors, and that is, I'm sure that is a challenge for you, right? It is important to have third-party credibility when you're changing something like this, especially
Right,
when you're going against the status quo, the
right.
bigger behemoths. I congratulate what you're doing. It really is very, very cool. What do you see this looking like for Nez if this is to sit like for B2B payments, for B2B transactions? What do you see this looking like for that space should Nez really succeed like you want it to?
I think we end up becoming the new standard for escrow transactions and milestone payments. Because currently the standard that has existed has been with third parties, with rules around them, with some rules that support what they do. And we're exactly in the middle of that. So we're not actually defining the rule, we're actually in the middle of the rules that has been put there to protect the likes of the third parties. I think in the next few years, we become the gold standard for escrow and milestone payments, meaning we're going to be having competition very soon. Right now,
Yes, you
we're the
are.
only ones in the market providing this system. Again, we have an IP, the modes, the technology, the systems, all of that stuff. But in the next, few years, we start to see competition, and you know what? We welcome it. There's a huge market, and we don't even think we want to chase it all. So, we welcome competition, healthy competition, of course. So that's where I see Nez going.
That's great, Lopsii. Well, you're definitely challenging one of the most overlooked bottlenecks in business.
Mhm.
Okay, Lopsii, what do you do on your free time? What's your hobbies? What's your
I
passions?
like
Do
to
you have
play
any
ping
free
pong.
time?
I do have free time, actually. So I know I run two companies. I'm not sure if I mentioned the first company that I mentioned that started like hit $90 million in billing and payout. I still run that because it's bootstrapped. I'm able to put in a little bit more time. We have a team around it, so I run it on a more less operational way compared to my other company. So meaning I'm actually booked for time because I'm still trying to make sure things are running. Although with the focus on Nez, more focus on Nez because we're investor backed. But I do love to play ping pong.
You
I'm a
do?
local ping pong champion, just for my community.
You're a what ping
Not
pong champion?
local.
Local ping, you
Yeah,
are.
yeah.
Wow.
Local. So when I say local, it's among like 10 people. So that's why it's
Okay.
local. It's not like
But
the whole community.
you're the champion.
Well, on some days.
Okay. So every time I think of ping pong, like when you say ping pong, the very first thing that comes up is the movie Forrest Gump. Remember when he
Oh,
was
okay.
ping pong
Yes,
champion?
yes, yes, yes. No, Forrest Gump would definitely beat me if I played him. Like the way he played in that movie, no, I wouldn't survive.
Yeah. Well, that's great. That's awesome. Okay, Loopsy, tell people how to get a hold of you.
LinkedIn, I'm super fast with responses. LinkedIn is one of them. So if you send me a request, I probably see it immediately. If you send me a message, I probably respond to your message before you send the message. That's how quick I am. But that's LinkedIn is the best way to reach me. I'm very, very, very addicted to LinkedIn. So LinkedIn's got to stop that. KJ, I had a question for you.
Sure.
The transition, and I think it's really interesting when I was talking to your team, the transition of starting this whole podcast business during the pandemic. How have you found that whole journey? I know you've been interviewing me the whole time, but I'm
How
also
did I find this whole journey with
that's right.
well, you're so nice to ask. Thank you. Well, as far as the podcast, well, my background is in crisis management. So I have dealt with probably every lawsuit, breach, government agency like situation that's been out there regarding helping companies navigate a good narrative when something happens, right?
Right.
in doing that for the first half of my career, I learned something very interesting about my industry. It's very cutthroat, and my industry is used 10 times more to take competitors out than it is to help them tell their story. And so I decided, long story short, to do something about it. I reversed engineered the crisis management process and then R&D and tested it on innovative companies that were actually had better technology, better services, and used that to get enough credibility, storytelling, third-party credibility to protect their brand. Because what I saw is every single innovator disruptor that I worked with that we were protecting had been attacked by the status quo. Bigger behemoths didn't want them to succeed. And today it's a PR world, right?
Right.
So you have one end that's manipulating it, and you have one end that really needs it, but they're so naive. So in doing that, I ended up starting an agency, and we work with disruptive innovators to help them expand more safely and protect their brand story. They're being endorsed. They got furloughed during the pandemic. I don't know, the bubonic plague. I don't know, right? And our communication lines of the world are furloughed. Press conferences virtually, online. We went on a 24/7 schedule, a crisis org board, and we had our clients answering questions for all different sorts of media long. And then, published stories would come out of it, just really educating people on what's happening. Nothing's going back to the same.
Right.
Things. We want to be like, we want to know.
Right.
And so someone decided that we would do a podcast. That
Wow.
podcast just to tell the stories. Like the media still are probably our number one quote unquote client for this, and that's how it grew. And then it just grew by word of mouth. And then one disruptor, contacted another disruptor and this and that, and then the network, and then that's how it happened.
That's amazing, KJ. How can other people reach you?
You are just the sweetest ever. Well, they can go to Disruption Interruption, look at the podcast. It's on all your major platforms. And, they can go tell someone about this podcast and tell them to go disrupt their market with a tidbit from this show.
I hope they take that.
They will. Thanks, Lopsii.
Thanks, KJ.
That's a wrap, everyone. I know you learned something. So definitely, again, go tell somebody about this podcast. And thanks for listening, where we transform lives, we change consumer behavior, we alter economics, right, Lopsii?
That's correct.
And we never accept the status quo. Ciao for now.
Because we live in a highly litigious society, with America being one of the top litigious countries in the world, here's our legal disclaimer. This information is not intended to be a substitute for professional public relations or legal advice. Do not disregard seeking professional, legal, healthcare, or financial advice, or delay seeking professional PR or legal advice because of something you have heard here. Contact an attorney to obtain advice on any particular legal situation or problem. Use of this podcast or our website or any of its social media or email links do not create an agency-client relationship between Johto PR and the user.